Okay, so let's start. Good afternoon and good morning, depending on where you are, to all the clients and friends of Tiger Brokers and Richlink. Welcome to Richlink and Tiger Brokers monthly webinar program, where we showcase some very interesting Australian companies. These companies are chosen due to investor interest or from sectors that we believe the next phase of rapid growth is about to happen. All investor focus on sort of a climate change and decarbonization of the economy. That's EV and lithium was the theme last year. They were truly in the limelight in 2022. But all EVs and everything else these days needs to be charged with electricity. Power generation is a very critical industry. It also needs to move away from the fossil fuels such as coal and gas. Due to the inherent issue of reliability issue with the renewable energy such as wind and solar, I guess a nuclear power generation becomes a very topical issue. Even in Australia, we start to see the debate of nuclear power has been reignited. We're delighted today to have invited two industry veterans to share with us their view on the future of uranium and their company's story of meeting the world's future demand. To start with, first we have John Borshoff, who is the Managing Director and CEO of DYL, an ASX-listed company. John is a geologist by training and has worked in the mining sector in Australia and Africa for more than 40 years. He founded Paladin Energy and served as the managing director and CEO for, I reckon, more than 20 years, and led the company to become a major uranium mine exporter in Namibia and Malawi, and have multiple interests in globally in many jurisdictions, and has a market cap of $5 billion at its peak. John has extensive technical knowledge of the uranium industry and is recognized as a leading global authority and has wide experience in all aspects of other sort of company management. So without further ado, I hand it over to John to share the story of DYL.
Thank you. Thank you, George, for that informative introduction and kind introduction. So I'm very pleased to be here today to present this Richlink Capital and Tiger Broker forum and update on Paladin, and give you, as you heard George say, some thoughts regarding the phenomenal developments in nuclear and uranium that is occurring. And I'll be focusing on our flagship uranium projects, both in the Tumas project in Namibia and the Mulga project we have in Western Australia. And with these, I hope to show the very strong position that this places DYL. We have a solid history in doing what we say, and as you heard, our credibility in this regard is recognised throughout the world, and or the industry, by governments and stakeholders alike. Before I proceed, I'm required to by law to alert you to this disclaimer that you see before you. And basically it states that I'll be making some forward-looking statements, and in deciding whether to invest in Deep Yellow, you should nevertheless undertake your own independent research before making an investment decision. I just wanted to sort of start things off by putting emphasis on the team and what we have. We have a strong uranium knowledge, as you've heard, and performance, understand the sector and its dynamics. And I believe we will be one of the very few companies that will go into production of all the junior company hopefuls, and delivered by a proven team. We stand out uniquely in this regard. We have experienced chairman, myself as MD, and my team. And as you can see, and as you heard, I founded Paladin, and that was a phenomenal success. It was the only junior that delivered during what I call the China boom in the early 2000s up to Fukushima time. And the only other group that delivered was Kazatomprom. And so, it's a very hard business to get into. I left Paladin and then took over Deep Yellow in 2016. And again, a company that was struggling and with a good strategy, bringing in my team from Paladin and bringing in an appropriate dual pillar strategy for new projects and developing our own. We have now succeeded with 2 projects, both through organic effort and inorganic through M&A. So the uranium and nuclear, I'll just treat it a little bit differently, and just to go and say that the global commodity bullishness that has been experienced in selected metals is unprecedented and will continue, and it's all born out of that need for driving things with electricity in ever increasing amounts, day in, day out, 24/7, and it's not only to accommodate the non-fossil fuel emphasis, which is the growth in non-fossil fuel growth in electricity, which is an enormous task in itself, but at the same time replace 60% of the current global electricity production coming out of fossil fuel to eventually be only from non-fossil origin, with low carbon emitting sources. The need for this ever-increasing amounts of electricity for usages not even contemplated even 10 years ago now must transition from fossil to non-fossil for energy production if climate change and zero emission targets are to be taken seriously. This change, by the way, will need to accommodate more than just electricity production, as we currently know it, because this only amounts to 20% of the global energy usage. But it also importantly needs to support the dramatic change in transportation and industrial heat production, and the highly expensive replacement technologies such as wind and solar, which are popular, are failing to deliver, and there is therefore a need for more nuclear, and it's compelling because of this massive struggle to manage the changes needed to get this highly complex global energy equation into a position where it can deliver. So nuclear is the clear winner. It's becoming an answer at long last, and it is in a strong recovery mode. The huge benefits of nuclear are now being acknowledged within dozens or many major economies. Their governments are finally saying that enough is enough, and they want more nuclear to get this zero emission targets back on track, and the growing energy availability and growth of energy availability, and to make electricity cheap. There are stark realities facing the world on how to manage the enormous challenges that lie ahead to achieve this zero carbon, which are not even yet fully recognised. Renewables are only part of this solution, and although only able to operate, as I mentioned, only sort of 6 hours a day, and for this, they also deliver electricity with an ongoing enormous material requirement for infrastructure and have a cost impediment. Nuclear, on the other hand, can do this easily with a time-proving technology, able to deliver 24 hours a day with absolutely the lowest carbon footprint, the lowest material requirement, the lowest land usage component, and the best safety record of all energy generating technologies, and also the lowest price. We are in an energy crisis, which is likely to be here for decades. With increasing nuclear demand arising from zero emission ambitions globally, the consequences of the Russia-Ukraine war, there is urgent need for both increasing supply of uranium and to diversify that supply. There is little doubt that more uranium will be needed to be produced over the next 20 to 40 years to support the newly invigorated and growing nuclear sector, and Deep Yellow is positioning itself perfectly for this outcome. I won't go on this slide very much. This just indicates that nuclear, from very extensive studies, is in the lowest sort of cost of energy by comparing all other technologies. Now, just to quickly, Deep Yellow has had an exceptional growth, as you can see, in the last 12 months, and this is also incorporating both the merger that we undertook, which gave us a project also in Western Australia, and we believe our strategy to get diversified supply in many jurisdictions is a very, very important part of the process to eliminate risk in security of supply. So from one project last year now to two, we're positioned well. We've got a great team, and our market cap now is doubled to about 600 million from what it was. But more important, and it had been on a peak of 900 million, where all stocks, uranium stocks, in September reached, and then they've sort of come down. But we believe this is only a short-term event. Just here, just to indicate our market, our structure, we've got 750 shares out. As I say, there's plenty of room to get major shareholders to come in, and that's what one of the things is with the scaling up of the company. Now we'll be encouraging larger funds to come in, and you'll notice there the decline in uranium share price. This has been by all the uranium equities generally, but there is starting to be an upturn now coming through. So we have organic and inorganic growth, as I mentioned. Our footprint now is expanded from Namibia and also to include Australia. We have two major projects. The Tumas project, which is in advanced stage. We'll be reporting the results of the feasibility study early February, and this will be a 3 million pound production. And it's a great project in a great jurisdiction that is producing a lot of uranium. Two Chinese companies are there with CNNC and CGN, who I know very well, and Deep Yellow. I started the Langer Heinrich project in that country in the early 2000s. There's Mulga Rock there you see in Western Australia, a great project, and that is going to be following development after Tumas by about 12 months, And so by 2027, we hope to have 2 production operations, one in Namibia, one in Western Australia. We also have excellent exploration potential in the Alligator Rivers, which is an excellent country, and my colleague will talk more about the potential of that region. It's really great for big deposits, and we think that's definitely a future project for the company. And we've got a similar in Omahola, which is a basement hard rock. Just to mention, by the way, the 2 bottom deposits are associated with paleo drainages. They're near surface, they're in soft rock, and easy to mine. This is the figures for the Tumas update. As I say, it's got 20-year life of mine. We believe we'll get it to 30 years. It's still a lot of upside in the project. There are 60 million pounds of reserves. We've got a lot of inferred resources, and it's just a great project. We expect these numbers will change a little bit because of the impact of inflation, and we'll see what those results will come out in the near, as I say, early February. The Mulga Rock, our new project, is another uranium, but this one is a little bit different. We saw potential here for critical minerals also, and rare earths. It will still be a major uranium project, but we will value add a lot more than has been previously indicated through, we hope to exploit copper, nickel, cobalt, and rare earths. And that feasibility study will start mid next year, and we hope to complete it in mid-calendar year 24. And it's an opportunity to turn a single commodity Mulga Rock into a multi-commodity operation with an extended life beyond the 20 years that it's currently, and with a significant increase in the project value. This is a very quick, with our merger, with our getting sector consolidation, acquiring another company, and our own organic development through the drill bit. We're now one of the largest resource-based exploration or development companies in the world, and we think this is important. It's increased our scale. It's given us currency to do other activities, and we're looking at obviously more development. So very quickly, looking ahead, Deep Yellow has the building blocks to establish as a tier 1 uranium company. Tumas project in Namibia is world-class, 25-year, 3 million pounds, and anticipated mid-20 calendar year 25. Mulga Rock, it'll be a multi-commodity, we're hoping, about 3.5 million pound per annum. Currently, it's a 15-year life of mine. We think we'll get it to greater than 20, and production startup mid-late 2027. Extensive exploration in our projects, both within our advanced project and within our exploration projects in Namibia and Alligator. The market backdrop creates an excellent opportunity for increasing our value and on consolidating further with other acquisitions. We believe for an industry that's been under sufferance since Fukushima, there is a new need to rebuild a mining house and to establish another tier 1 uranium platform. So we're on the pathway to developing becoming with our objectives, a reliable long-term uranium producer. And I think Deep Yellow stands uniquely in the uranium sector, particularly amongst the production hopefuls, because it will be able to continue to deliver, because this is, I think, and because of this, I think this will make a great investment opportunity. And for those considering investing in Deep Yellow, we are listed on the ASX in Australia and the OTC Markets platform based in New York. And now there's some time for some questions. I'll hand it over to George. Thank you.
Thank you, John. I should have mentioned to our audience, if you have any questions, the webinar platform should have a chat screen to allow you to type in. John, the only question I can see at the moment is asking what's your prospecting plans for this year?
Prospecting, you mean in terms of exploration or in terms of development?
I suspect that is the meaning. It's actually written in English.
So look, we've got a heavy program of developing our finishing off our feasibility study, which we hope to get approval for, then starting the engineering, a detailed design, and hope to get a development decision by the end of calendar year 23, depending on uranium price, which we won't move unless it's above $65 a pound. There's a whole reason why I think that the prices will go above that number, and now more and more companies are coming in, big ones like Cameco. On the exploration, we're committing exploration funds also in the Alligator project and also in Omahola in Namibia. So there will be lots of information, that we'll be putting out there, and we believe that'll be very good for the company. Over.
Thank you. Both Namibia and Australia are currently countries where uranium are being produced. Can you touch on briefly what's the regime in both countries, whether the government is supportive of the uranium industry?
Well, in Namibia, the government is highly supportive, and since the 1990s, where Rio started rossing, then the next company to come in the early 2000s was Langer Heinrich, where we built the company. The government is very encouraging of uranium and mining generally, and after we established Langer Heinrich, then CGN purchased the Husab uranium mine and developed that into a huge project. And there are now 2 or 3 companies also there, Bannerman and Forces, who have projects. So that jurisdiction is excellent. It is a low grade sort of type of targets, but it's in arid zone, which are perfect for uranium, and the issue is only water, and that's being resolved with desalination. In Australia, it's slightly different. One of the reasons we chose Western Australia with Vimy was that they had managed to get an approval for their project, even though Western Australia has got a policy with the Labor government of being not supportive of uranium. And we've been assured that as long as we conform to those approvals, this project can go ahead. I believe anyhow that these anti-uranium policies will change as global pressure comes on to get nuclear in a much more important role, and not everybody relying on a simplistic renewable solution. Northern Territory, of course, is there. We believe that has a positive jurisdiction. It's had much mining. Currently its mining is finished, but that is also the government pro-uranium. You may hear a bit more with Brendan about that.
Yeah, thank you, John. Clearly, you're known not only in Australia, but also to our Chinese investors. There's someone calling you a legend of the industry. The next question is with listing on the ASX, are you expecting any restrictions for Chinese investors to invest in your company, which I think
No.
they meant to be strategic investors, substantial investors?
Right. I don't expect just normal investment to be an issue. I do see in the last 3 weeks there has been a softening of the political situation between both our countries, and I think that as all of these have to go through FIRB and to be discussed, and then we would encourage an association because of my familiarity with particularly with CGN and CNNC. Well, I have good relationships in Namibia, and in there is opportunities as well to do things with our Chinese counterparts. Over.
Thank you for that. I guess the next question is probably not to be answered. I'll ask you, when do you think your share price will be up? We'll leave that to the market. With that, I think we'll welcome our next presenter, Brendan Bradley, who is the Managing Director of DYL Resources. Yeah, I can see the screen is up. Brendan is a geologist as well, has more than 25 years of extensive experience in exploration and mine development, highly experienced. He's on the senior management team at various mining companies in the past, including Aurelia, Dominion Mining, Kingsgate Consolidated, and I think DYL is mostly Australia focused. So with that, I'll hand it over to Brendan to share with us the DYL story. Brendan?
Well, thanks, George, and thanks to the team at Tiger Brokers and Richlink Capital Group for the opportunity to present DYL Resources here today. As George said, I'm the Managing Director of DYL Resources, and hopefully the presentation is working. So this is our usual disclaimer, which I urge investors to read at their own leisure. As John alluded to, investors are encouraged to make their own investment decisions and due diligence. And this presentation has been already uploaded on the company's website and also the ASX platform. So we urge you to read that at your own leisure. So DYL Resources is in the mineral exploration discovery business. Our core goal is to deliver discovery drill holes for our shareholders. And to achieve this, we've brought together a portfolio of high-quality exploration projects located in several of Australia's most sought-after exploration regions, whether in Western Australia, where DYL is exploring immediately north of Chalice Mining's recent large-scale nickel, copper, and platinum group element discovery at Gonneville, or in Eastern Australia and New South Wales, we're exploring for copper gold in Australia's porphyry copper gold heartland of New South Wales. Today, we're talking uranium, and naturally the spotlight is on DevEx's Nabarlek uranium project located in the Northern Territory. This is, as asked previously, this is a traditional uranium mining jurisdiction in the Northern Territory. Uranium mining has been mined there for well over 50 years. And likewise, DevEx has acquired a large portfolio of tenements, which they've been actively exploring over the last 12 months, with a core focus of exploring around the historical Nabarlek uranium mine, which is well renowned as being Australia's highest grade uranium mine for its time, with over 24 million pounds of uranium being mined and produced at a grade of 1.84% uranium. Just as an allude to people understanding uranium, and when you look at resources and exploration, various companies talk about their grade, they talk about the uranium. Some talk about large tonnages at grades where they talk about it in the ranges of ppm or parts per million. In the case of the Northern Territory, we talk about it in percents. This is due to the high-grade nature of the deposits that are found in this area. So, for example, for people who want to understand, 1% is the equivalent to 10,000 ppm. So if you're talking about 1,000 ppm, that's like 0.1%. Grade is king in the Northern Territory. DevEx represents a very unique opportunity for our investors. We are one of the very few Australian-listed or ASX companies exploring for high-grade uranium in Australia. That's principally because of the province where we're exploring in the Northern Territory. We've been exploring around there over the last 12 months with drilling. We're now exploring multiple prospects with uranium intercepts already, with intercepts well over 10 meters at 1% uranium from our prospects. The company DevEx is backed by a heavily motivated and invested shareholder group and also our board. It's headed by our chairman and major shareholder, Tim Goyder. Tim's well known in Australia for his involvement and enthusiasm in exploration. He's been successful in his involvement in a number of companies which he's chaired and major shareholder of, including Chalice Mines with its Gonaville nickel copper PGE discovery, and likewise at Liontown Resources with a massive lithium resource up at Kathleen Valley in Western Australia. Tim's an exploration enthusiast, and he understands it's about the team that you put around your company and also the momentum you need to do. You don't make discoveries without drilling holes, and you need to have the backing to be able to drill those holes. And likewise, when you look at DevEx Resources and where we stand right now, we have significant cash in the bank, and that gives us that ability to maintain over the next 12 months that exploration momentum with drilling. We've got numerous intercepts that we need to follow up on this year. We've got significant high-grade uranium that we intersected last year, and we need to be following up on it this year. And so with $19 million in the bank as of last quarter, that cash gives us that ability to maintain that momentum. So this year is going to see a very active year of exploration activities on all three projects. So, as mentioned, we're focused in on Nabarlek at the moment in the Northern Territory. The map you see on the right-hand side gives you an image. We're located within the Alligator Rivers uranium province. It's not called a uranium province without good reason. Over 500 million pounds of uranium has been either defined in current resources or has been mined from this area. And as I mentioned, well over 40 to 50 years of mining history in this area, coming from big deposits like the Ranger uranium mine, which has seen over 40 years of mining in this area. Our tenements, we've got over 4,500 square kilometres of tenements. We're situated outside of the Kakadu National Park in an area where we've got great relations with the traditional owners in the area. The red outline gives you an idea of the area that we're primarily focused in. There are granted exploration tenements and also the granted mining lease, which is the Nabarlek mining lease located in the centre. This is the main focus for our exploration activities, and we'll move our other exploration applications, which are the blue outlines, towards grant as we progress. But our core focus right now is immediately surrounding the existing operation that was at Nabarlek, which was mined in the 1980s. Just to give a snapshot for people to understand, when we talk about grade is king, and Nabarlek is a classic example. The images that you see here are just slices of the Nabarlek mine that was mined in the 1980s. These were mined out, but the purpose for this is to give your investors a sense of scale. The cross-section shows continuous, on the right-hand side, the cross-section shows continuous uranium mineralization with intercepts like 16 meters at 9.6% or 19 meters at 13%, significantly high grades. On the left-hand side, this is what's called a long section. All those dots represent are the intercepts which have defined the Nabarlek deposit, which was mined out. So the bulk of the 24 million pounds has come from this pit. It's from surface. This is really important point to note, that the opportunity out here is we don't have thick cover over these areas. They're all within sort of 100 to 200 meters of the surface and all exploitable potentially from open pit. So we're not talking about deep exploration. And importantly, the scale bar you see down on the left-hand side, 25 meters. These 24 million pounds There's not a large area that these occur in. And so that's where you see such a significant amount of uranium contained at high grades. And that's the real prize. That's the real opportunity. So when we talk about our drill hole intercepts we received this year, or last year, that's what we're sort of seeing. We're seeing these sort of intercepts, and we've got to start following up on it where we're seeing. A quick snapshot. John talked about the uranium industry previously and where the uranium goes and the decarbonisation. I think that summarises it quite well. I'm an explorer. Our business is exploration. We're DevEx. As a snapshot, the uranium price, you can see behind which you can see the Nabarlek uranium project there. We acquired the Nabarlek project back in 2008 when the uranium price was still above $75 per pound. We were excited about it. We got going with exploration. We started exploring around Nabarlek. We were making discoveries, intercepts, and very significant intercepts were being found during that period between there and 2011 when the uranium price collapsed following Fukushima. What's seen now is that the exploration has been in a hiatus. It's been slow, no excitement for uranium exploration until 2022, when we've seen a significant upsurge in the uranium price on the spot market. And, most people would sort of believe that for uranium to really come on board, we need to see that uranium price start getting north of 75 again. So that gives us that opportunity to now start exploring again. We need to make these discoveries. We need to bring and start defining resources out here. We've got great infrastructure around Nabarlek. The mine area to the north of the photo, the area is flat. It's easily traversable during the dry season. And likewise, we've got a fantastic airstrip and exploration camp where our drillers can fly in easily and occupy the area, and exploration takes place. So it's busy times out there during the dry season. So just showing you a snapshot of where we're primarily focused up at Nabarlek. The mining lease, which is the red outline in the center, where you can see the airstrip, and likewise the Nabarlek mine, the 24 million pounds was produced from Nabarlek. We're exploring that full region that you're seeing in there. We've got numerous prospects that are identified by drill hole intercepts, such as those magenta squares you see on this image. Lots of intercepts greater than what's called 1,000 ppm or 0.1% uranium. And that's what we've been focused on over the last 12 months, is following up with drill rigs, going to all of these prospects, and we've still got more prospects to go to, and drilling some of these historical uranium intercepts. And intercepts like at Nabarlek South, immediately to the south of Nabarlek, where we're getting intercepts like 10.1 meters at 1% uranium, or including 3 meters at 2.63% uranium, or 26,000 ppm uranium in ppm terms. And likewise at U42 prospect to the west. Likewise, we're making a virgin discovery out there at U42 on very broad space drilling. And this is setting the scene for what we're going to be doing this year, which is getting back out here with the drill rig and start following up on these new intercepts that we're getting and what we're understanding. So it's going to be busy times. And just to talk you through Nabarlek South and likewise U42, we focused immediately south of the Nabarlek pit at a prospect called Nabarlek South. We saw a cluster of uranium intercepts that had been previously drilled in an ordinary way about 20 to 40 years ago. We followed up with some tighter space drilling to understand the geometry, and we're now starting to get a good handle of the geometry of the uranium mineralization out there. As mentioned, 10 meters at 1% uranium, and also we're seeing broader intercepts of over 60 meters of very strong uranium mineralization made up by a whole lot of fractures of uranium mineralization, which is grading above 0.5% to over 1% in those zones. And so we've got to come back, and now that we're starting to understand its controls, expand this drilling and follow up on these results. And as I mentioned, by these cross sections you're seeing here, these are slices through the earth showing just the drill holes, which are in the black, is that this is near surface. It's not deep. It's all within sort of 100 to 200 meters of surface. And so very easily exploitable if we can see enough volume of this material. And that's what we'll be focused on this year. Stepping further afield to the west at U42 prospect, out to where you see that red box up here. U42 represents a new early stage virgin discovery, which we're following up on from the south. So just sort of focusing on U42 as an example of where we're going to be busy this year. We followed up on some historical uranium mineralization to the south of the image you see here. All the colors you see here is a representation of uranium from an airborne survey, and it's just showing uranium in the ground and where it's occurring and where it's leaking through the soils and so forth. And so we're able to measure the uranium there. It's anomalous, and then we follow up with drilling. What we found is we drilled on very broad space drilling, targeting this uranium mineralization on broad centers. So hole 14, we intersected almost 2 meters at 0.44% uranium equivalent. We're waiting on assay results, which we anticipate to be reporting shortly. The drilling we see here, a scale bar to the left-hand side, you see 1 kilometer by that black line there. The drill holes that we drilled here were 300 meters apart, so very significant. And when you look at hole 14, where this intercept is, there's no further RC or diamond drilling to the north right up to our tenement boundary for 3 kilometers. We can see the trend, and we need to focus on this area. This is a real priority area for focus. So just to give you a snapshot of what hole 14 looks like in cross-section, this is a quick cross-section. Hole 14, the drill hole we drilled, we hit the uranium mineralization down here. It looks very similar to other deposits in the area like Ranger Mine to the south, and very similar style of mineralization. It's bedrock hosted. We can see the uranium anyway in the chips. Right now we're reporting uranium equivalent from downhole gamma. We're expecting the assay results shortly. So we're really encouraged by that. We've got to follow it back up towards the unconformity, where traditionally you see lots of high-grade uranium occurring in a number of deposits in the area. And similarly, we've got to follow along strike for that long distance of 3 kilometers. And so it'll be busy times up at U42. So that sets the scene for Nabarlek. And just very briefly, as investors are interested in what DevEx is up to, we're also exploring Western Australia, immediately north of Chalice's nickel copper platinum group element discovery at Gonneville. This is a big deposit of nickel, copper, and palladium in the area, and they're exploring to the north along this magnetic trend. We've got our own ground, and we've been busy getting exploration going on there. We've got the right rocks. We know what we've got to do, and we'll be busy there over the next quarter. And likewise in New South Wales, this is porphyry copper gold heartland in New South Wales, and we plan to be drilling there this month, and we'll be following up on a number of copper gold zones of mineralization in this area at New South Wales, and both consistent copper and consistent gold mineralization. But I'll let your investors look at that, since today's about uranium. Just letting people know that we're going to be kicking a lot of shots on gold over the next quarter. So just in summary, we're waiting on final assay results from our drilling at Nabarlek during 2022. We've been announcing as we go. We expect more assay results in shortly, so there'll be more news flow for DevEx shareholders over the next quarter. And likewise, we plan to be back in there this year with drilling planned in the second quarter once the dry season, and the dry season is typically between April and November of this year, and so that'll be pretty busy. And similarly with activities at Sovereign and Junee, our shareholders can look forward to seeing more news flowing, and as we work our way towards drilling at Nabarlek in April is when we plan to be there. So George, thank you, and thank you to shareholders, and also thank you to everyone else for their interest.
Right. Thank you, Brendan, for that presentation. I actually have a few questions for you lined up here. First one is in English. Could you please help explain the needs of uranium? I suppose the question is really talk about demand and supply. Do you care to address that?
Yeah, I mean, I sort of reiterate where John is about the supply and the demand. And for those unfamiliar with uranium, bear in mind I'm an explorer. I'm not a market economist, but it's well known in the area that you start at the broadest level, is that the world needs to decarbonize, and the only way to do that is to move away from fossil fuels, and principally then looking for clean energy. And uranium, as recognized in, nowhere better is it recognized than in China, is uranium provides a significant baseload power to whatever other means people want to do to find an alternative energy. Energy is important, and we're moving into a very much an competitive energy market for uranium and for other alternative energy. And with uranium as a baseload power, where is that uranium going to come from? If you look at what happened with Fukushima, you've seen a significant downturn in the exploration industry, the resources industry. No new mines have really been coming on. This is principally because of the uranium price. And so that extended period of time has caused a shortfall in new uranium pounds being discovered. So when the world suddenly realizes and starts to move towards a strong demand for uranium, where are they going to find those pounds, and where are they going to find new pounds, and where are they going to bring it? The shortfall on uranium is quite astounding in my view, and nowhere better is it seen when projects like Sprott funds can actually come in and buy uranium and see such an uptick in the uranium price from just simple buying. And so I think, you know, the demand on uranium over the next 10 to 20 years is quite significant. Where will you find new uranium excitement projects? You look at similar commodities like lithium or copper or other commodities, and you find out and you see what needs when suddenly demand for lithium's there, and then you look for ASX companies or explorers and developers for lithium, and suddenly you've got hundreds of lithium explorers. Good luck finding hundreds of uranium explorers out there. Really, on the ASX platform, there's very few uranium explorers, especially high-grade explorers like Deep Yellow and DevEx Resources, to name a few.
Well answered. The next question is that you talked about grade is the king. Besides Australia, are there other countries where similar grades can be found? And what is the advantages of mining uranium in Australia?
Yeah, look, great. I mean, grade in tons. For us, grade is about the contained amount of value of the uranium that occurs in that Alligator Rivers uranium province, as proven by the mines and by the resources that have been defined at the moment. Yeah, there is one other province in the world, and that is in Canada, in the Athabasca uranium province up there. Similar, very high-grade deposits. The really underground uranium is being mined from very high-grade deposits up there. Both the rocks of the Alligator Rivers uranium province in the Northern Territory, where we're exploring, and also Deep Yellow exploring, and also in Canada in the Athabasca Basin, very similar style of deposits, very similar age, very similar style of rocks overall. And so they represent really the only two major provinces around the world where these style of hard rock, conventional mining deposits are. What sets, in my view, what sets the Northern Territory province at Alligator Rivers apart from Canada is that our occurrence of uranium mineralization are much, much closer to surface. Within the Athabasca Basin, you're dealing with deposits that are being currently mined that are well underneath sort of several hundred meters of cover that they've got to develop down to. They're attractive, they're very high grade and in their own right, but where we're exploring in the Northern Territory is they're very shallow. And so combine that with great grades, very contained. We know how to mine them. It's been mined already in the 80s at Narblek, so we know what the deposits look like. That's a great opportunity.
Right. The next question is, how far are you from production? Are you looking for new investors?
We're always welcoming new investors, for sure. Production-wise, well, we're in the business of exploration. So this year we've had drill hole intercepts moving towards, with production in the distant future. What our goal is right now is to now follow up on those intercepts, start to get consistent intercepts that we can start thinking about volume, think about tons, and think about grade. So we've got some pretty new high-grade holes, as I showed you on U42, those intercepts are there. We've got to follow up on those intercepts and move towards getting them together, getting a coherent strand towards resources, and then move towards production. The advantages that we have up in the Northern Territory naturally is the permits that we've got. We've got the Narblek mining lease in the area already. It's got a history of production in the region, including its own regulatory environment and framework, which is well known for the last 40 to 50 years.
Right. Well, Brendan, you speak really fast. I truly hope the machine translation kept up with your pace. But because of that, we actually have a few extra minutes to cover some of the issues. I'd like to give John the opportunity to elaborate on the supply-demand situation of uranium globally.
Yes, George. Look, you have to look at the uranium in a over history, and as Brendan alluded, that there have been two events in the history of uranium that have had a nuclear that have significant impact: Chernobyl in 1986 and Fukushima. That disrupted the whole programs of advancement of nuclear, and the first phase in the sort of 70s and 80s, there was an overproduction of uranium, and the price started to be dominated by inventories and not primary supply. When China came in 2003 with its incredible sort of prediction of building 50 reactors by 2020, which a lot of the old Western world didn't even believe. It made another, a resurgence. Firstly, endorsing nuclear, and then because before China, it was all downhill for nuclear. But even so, once that revival happened, there has been a looming shortage of uranium underneath all of the sort of positiveness of a nuclear coming back, of nuclear now being the big brother of low emission, and will make renewables really subordinate. So there's growth and there's a shortage. So the pressure on uranium is, or the business is, that nobody's going to start subsidizing utilities. They have to pay for the product. And people say, oh, no, if it goes above $60, we can't afford da. Well, that doesn't work. People were saying in the battery business, if lithium spodumene product goes above $1,000, we won't be able to afford to make batteries. Well, the market is the market, and it's gone to 5,000-6,000, and people are still hungering for that. So uranium has got a huge upside. There needs to be, there are few developers of uranium and few good explorers. There has to be a huge amount of explorers, because these explorers have to work for deposits which are going to be 1935, 1940, 2025, 2035, 2045. And I believe there will be an influx of explorers, as happens when prices go up. I don't believe it's possible to have a sustainable production industry, which is now in reconstruction in a post-Fukushima, that that can afford to develop, to use its reserves at anything less than $65-$75 a pound. This is the new reality, it's showing in all commodities. So there's a shortage, there's growth. Nuclear demand is absolutely there. People are talking from the 440 reactors, it's going to go to 600-800 reactors. The small modular reactors are going to actually add optionality. They're not replacing the bigger reactors. They're just going to give you diversity of where to deploy these technologies. And so there's a big upside. Yes, there will be plenty of uranium, but there has to be a lot of investment in exploration and a lot of investment in expertise and people to develop these mines. Over.
Right. And it sounds like some of the audiences agree totally with you, and predicting this year the share price of all uranium companies will do very well.
I agree with that. I mean, not because I'm in uranium, it's just that that the industry has to, the consumers, the utilities have to recognize they can't just keep taking product and destroying an industry. It has to be healthy. And I believe, by the way, lithium can go into production much more easily than uranium. It takes longer. It's got a longer lead time. So there are natural filters to how much new production will come in. This will exacerbate the uranium price. And so there is upside. And I think, a carefully well-chosen sort of portfolio in those production companies, which won't have much upside because they've already built their bloody, a $50, $40 Cameco can only go to double. Others can go 8 times. Juniors can go incredible, explorers. So it's an exciting time, and it's just to pick the companies and the teams. Over.
Yeah, well, thank you, John and Brendan. Clearly, with your experience, John in particular, you probably have gone through the few cycles of the uranium industry already. We learned a lot more about the industry and the future, and hopefully our investors also learned something new today. And as the years develop, we may come back to revisit some of the predictions and views just to validate. Once again, on behalf of Richlink and Tiger Brokers, thank you, John and Brendan, for your time and your presentation today.
Thank you very much. It was most enjoyable.
Thanks, George. Most appreciated.
Thank you.